Welcome back, folks. You have market trading higher on the open. S&P's now down just 13 points. Dow gets into the green by 21. And right now, folks, as we do each and every Wednesday at 40 past the hour, we're going to talk to our man Teddy Kekstadt. Folks, you can check out Teddy's outstanding weekly Forex report, the Tiger Forex Report. New issues out every Monday. Updates throughout the week when warranted. You can sign up, folks, for only $97. Head on over to that page at TFNN. It comes with a 30-day money-back guarantee, and you can't go wrong. Our man, Mr. Teddy Kekstadt. We'll talk some dollar right now. Teddy Kekstadt, good morning.
Good morning, Tommy.
So we got a government shutdown, Teddy. Market really not reacting too much today. Can I kick it off with whether you think any of that's gonna factor into kind of any of the market reaction this morning or as we go forward?
Market doesn't care.
Yeah. That's what the charts say right now, man. It is. You know, even the market doesn't care. Dollar didn't even move. Even, what do you think about the ADP jobs numbers? You know, we might not get the non-farm. Market didn't really budge on those numbers today. I know I'm just throwing it at you, but this is, you know, as you're looking at currencies, we're looking at yields, of course. We got a Fed that meets later this month now. What do you think about kind of that action in terms of the jobs front?
Yeah, I don't think the market cares about that either right now. Because all they really care about is are we going to get another rate cut in October, which I don't think we're going to. I mean, I'm surprised we did cut it in September. I don't think we're going to get, everyone's on this bandwagon that we're going to get 2 more cuts before the end of the year. I think you're going to be lucky if you see another cut before Powell leaves office. You know, I mean, there's a lot of pressure on him and the Fed, but that was just a little speed bump. And you got to remember that the market's already factored in 3/4 of a rate cut since last year. We've only gotten 1/4. So there's 2 quarters that have to be cut before the market even starts to make a move and starts to bust out of its range. So I had this discussion with somebody yesterday about why mortgage rates haven't moved. I'm like, well, they're not going to. They've already factored in more than's been cut. So you're not getting any more juice. The banks are making a lot of money right now is what they're doing. And they're going to continue to make more money on that spread right now, you know. But until we start to see, you know, we need to have a 0.5 point happen and then another quarter or more to get, you know, the pricing into the market, which means then you'll see a big rally in the 30-year and the 10-year. And you'll also see that impact other markets. But until then, it's already factored in. So there's no reason for, you know, anyone that hasn't been paying attention for the past 12 months, you know, they're the ones who are going to get chopped around in this mess. Anyone that's been involved with it knows that they don't care. It's already out of their head. They're looking forward to whether there's going to be some action. So I think what's more important is to look at the crude and a couple of currencies, what they're moving on right now.
Well, let's do it, man. I was thinking of you when I talked about crude to kick off the program. We got a little bit of lower action in crude this morning, breaking the recent lows, actually, 61.56. Please talk to me on that kind of jump around from crude and how that's driving some of the action.
I love it. Like right now, we're laying on new monthly lows. We just spiked a couple ticks lower a few minutes ago, and I think that this is a nice little play because this is key support. If we can get lower and get a close, especially if we get around the $60 a barrel, and if we can get under $60 a barrel, that's when we're going to start to see the new range at least start to decrease, meaning that we'll press support, and then we'll probably come back into this area where this may become the new high zone as we move forward into the rest of the year. I think we're really likely to see by Christmas time probably where $60 will be the high end of the range, and probably 55 to 52 will be the lower end of the range, which means then you'll have a nice move in the yen also as well, which you're seeing right now today as we're talking right now.
You know, I was thinking about this just myself recently, Teddy, of course, you know, because we've been down at some lower levels and crude for a while now compared to especially some of those spikes we got during COVID and the war that initially started. Do you think this is like not the new norm, you know, that it's nothing stays forever, of course, but is this in the near term future like an area, or is this just an area of where we are right now with, you know, supply levels and demand, or is this kind of where we've achieved now, where we're talking about in a longer term basis? Do you see pressure on this downside? I was just trying to, you know, recalibrate my own brain here, saying, you know, are we dealing with a level now of crude that we're talking about, just like you said, 55, 60, 65, maybe we're pushing 75, but nothing near what was some of the peaks we've had in prior runs? Right.
Well, we can only here's the thing is that we have the Buffett tax we have to get removed. When the Buffett tax gets removed, we can have a potential of $30 lower of a slide in oil. Right now, every barrel of oil, there's a Warren Buffett tax. He gets paid $35 to move every single barrel in the country as a monopoly. So that's a tax that has to be removed. I think that it's probably there's too much bigger stuff that they're working on right now, but I can see every bit within the next year or so they're going to attack that agreement and bust up his monopoly where everything gets moved by Warren Buffett. And then when that happens, you're going to see crude go, because right now you have a floor of cost of $35 plus crude costs money to produce. So that puts you already at $45 to $50, meaning that's the absolute floor for oil. It can't get below it because they're not giving it away for free. You know what I'm saying?
So can you tell me, dig into that? I'm really not that aware of what you're talking about, and I would love just we got about 2 minutes, and I'm sure there's some people out there that understand this. So how does that work in terms of how that's legislated, or how does that work with that type of structure?
Well, when they remember
the Buffett
when they
tax.
When I call it the Buffett tax.
Yeah, but what is the fundamental? Yeah, go ahead.
Okay. So when they cut the pipelines, remember when they did all that with the new Green New Deal and stuff like that, and made the attack on oil? Oil transportation was put up to the railroads. Who owns all the railroads?
Sure, there you go.
We've all played Monopoly as kids. Everybody wants one railroad. Eventually, one person owns them all. He owns
I'll take a railroad.
All.
Yeah.
Yeah, exactly. I'll take a railroad too.
Right. Totally, man.
So think about that. All oil gets moved somehow by rail, and he charges $35 per barrel to move every barrel.
All right, I'll dig into it. I appreciate
tax. When that gets removed, from a majority of our supply, then oil can really come down. But until then, the cost has nothing to do with production. It has nothing to do with the oil industry. It doesn't even have anything to do with the taxes on the federal or state level. This is a production cost that has to be removed, or a transportation cost.
Sure, which is the same thing, right? No matter what, production, transportation, no matter what it costs to get it to the end user, right?
Right. Now, here's the thing: it's a double-edged sword, because when they do that, that's going to hit transportation stocks. Do you know what the profitability of the railroads are going to happen when they lose that?
Yeah, right.
You know what I mean? So as a component of the S&P 500, you would think that that's probably going to cause a jarring to the S&P 500 when it finally does happen, if they get rid of that.
Crude.
So.
All right. And what do you think about gold, man? Gold, new highs on a constant basis. We just hit, just under 3,900 right now. What do you think about gold trading?
I think right now it's the only flight to quality asset. Right? Bonds are not where it's at right now. There's no flight to quality there. There's obviously no flight to quality in the dollar. So where do you go? You go to gold. So, but I also look at it. I look at the rally right now as far as valuation. Gold is just like Nvidia and a couple other things. It's everybody's buying it. When everybody's buying it, I kind of look at it as one of the quotes from right before the crash of 29 is, when your shoe shine boy is giving you stock tips, telling you what they own, you're at the top.
That's the top, man. Those inflows to the gold ETFs, they were through the moon recently. It's like right now, really. Teddy, thank you so much for the education, the conversation, man. I hope you're doing well. We'll talk to you next week, okay?
Take care. Bye-bye.